welcome to another edition of the Energy Week podcast. Ryan Ray alongside the one, the only Dr. Energy herself, Ellen Wald. Ellen, we took off last week. We're back here for a short, we're kind of like Congress almost. We're kind of coming back for a special session, and then we're recessing again next week. But then we'll be back for the dog days of summer in August.
And like Congress, we accomplish absolutely nothing when it comes to policy.
You can't disagree with that. We're on the same page with Congress. We have on Gene Epstein scheduled to come on here in about 15, 20 minutes. So we're going to kind of go through a couple articles, but we want to bring him on. He came back on, I don't remember when it was, Ellen, back in early this year, talking about the inverted yield curve and was kind of tracking that. So we're going to see what he thinks about the economy and how that looks and what impacts that might have on the oil and gas market. But first, let's go to the Wall Street Journal. Big oil flashes the plastic. Subtitle: Chevron and Exxon are beefing up their petrochemicals focus as demand for fossil fuel wanes. Now, I know I'm in the minority here, but I am not buying the fossil fuel demand waning narrative. It might be waning this year or next year or whatever, but long-term fossil fuel demand growth, it seems like that's the spot to be in. But anyways, Ellen, petrochemicals, plastics, that seems like another spot to be in as well. What are your thoughts on this piece?
Yeah, I thought this was an interesting piece, particularly because we also just had news that SABIC, which is Saudi Arabia's biggest petrochemicals company, that they had some very disappointing earnings for the last quarter. So it's interesting to see that all of these companies, Saudi Aramco, is one of them, but also Chevron, ExxonMobil are putting a lot into petrochemicals, and yet it's unclear if these returns if this is really where the returns are going to come from, or maybe they just had a bad quarter, or maybe it's just global economic downturn, and if they invest now, then, in years to come, plastics are still where it's going to be. Whenever I hear this, I always think of the line from The Graduate. Plastics.
I haven't seen it. I don't know.
You haven't seen The Graduate. Okay.
No,
Everyone needs to get on to their preferred social media platform and tell Ryan that he needs to watch The Graduate.
I'm on Amazon right now seeing if I can buy The Graduate.
You probably don't have to buy it. You could probably on TV. I don't know. My mother made me watch it when I graduated college. But that's the song "Here's to You, Mrs. Robinson."
Mm-hmm, mm-hmm.
That's kind of where it comes from. Anyway, it's about this guy who's just, I think, graduated college. He doesn't quite know what he wants to do. And mostly it's about his weird affair with this older woman. But in it, he's at this party and his parents' friends are giving him advice on what to do with his life. And this older guy, kind of slaps on his back and goes, "Plastics. The future is in plastics." Well, apparently for Chevron and ExxonMobil, that's what they've decided to do.
Okay, yeah, and I don't know, was it on this show or Text on Gas podcast? We just kind of walked through the reality of not having plastics, and it's not real. I mean, I don't know how it's viable to get away from them at where we are right now. So if you're going to throw out the something new is going to replace it argument, that's fine. That's just not here. But if you're going to say something that is here is going to replace it, we talked about the straws on here. So you can, not very well, but you can replace the plastic straw with the paper straw. Paper straw is not as good, but you could do that. But Tupperware bowls, Ziplocs, inside your car, water bottle, I mean, I can keep going on and on and on. Plastics are everywhere. So I don't know how, as more and more nations go from third world to developing to first world status, I just don't see how we get around this. It just seems like this is more of a narrative, a kind of pleasing of certain demographics by saying, yeah, we're getting away from this, or yeah, this is going to go down. I don't see how that's actually a reality.
Yeah, and you're just talking about disposable plastics.
Yes.
Where I've actually been looking for some really good data on this for a while. Maybe if any of our listeners have seen any really good data on exactly what percentage of crude oil goes into creating disposable plastics, or what percentage of the plastics industry is really just disposable plastics. That would be really interesting, because I've been kind of looking for this for a while, because my sense is that disposable plastics are really not a very large component of the plastics market. And we're really talking more about the kind of stuff that are like parts in airplanes. Okay, think about it. If you want to be more fuel efficient, if you want to even move to, say, electric powered airplanes, which is its own other story that I actually read a really interesting article about that I probably should have included here, but maybe we'll talk about that another time. Battery powered airplanes, but you're going to need lighter materials, right? If you want to use less fuel for things, you need to make the material lighter. And plastics is really one of those key areas where you can make great stuff that's lighter. I mean, I visited a petrochemicals plant, and they make all sorts of specialty components that then they use to make the plastics. And they had this room that they took us into, basically showed like everything in this room, like all the different components that you wouldn't believe were actually made out of petrochemicals, like the stuff inside the cushions of your car. Like your car are made out of this stuff. Foam for mattresses, like every kind of foam is made out of this stuff. And I just think that when a lot of people say like, oh no, demand for plastics is going down, I think that they're maybe just thinking about disposables, and they don't realize that there's so much else that is made of plastic or that uses petrochemicals for that. And that's only going to increase as there's a push for less, for more fuel efficient stuff.
Yeah, no, you're right. I emphasize the disposables, but looking around here, my keyboard, my monitor, my webcam, microphone, all of this stuff, cars, my truck has all kinds of plastic inside of it. All of that stuff has plastics, and that stuff only compounds. But if you just took the disposable element of it, my larger portion is, let's just say the disposable element makes up 20%. As I'm looking at the disposable elements, I don't know how you replace those with anything else either. So if you said, that you might can do the straw, but the plastic water bottle, the Ziploc bags, stuff like that, you just can't. Those, unless you're going to go back to like the wooden barrel, to store stuff in and put some tar and pitch on it. I don't know. Even for the disposable things, there's not even a viable solution. So if you said, well, we're just going to cut those out, there's not anything that's on the market now. And as people become richer, they have more things, which means they buy more stuff like water bottles and Ziploc bags.
And not just, but there's also the environmental aspect to this. And I'm thinking back again to, gosh, I think this was my freshman year of college. I took this class about like something, environmental something. And one of the first things that the professor had us do was look at the environmental impact of using paper coffee cups as opposed to polystyrene cups. And everyone thinks, oh my God, the styrofoam cups are horrible. They last forever. They, are terrible. We got to use these paper cups. And if you compared the environmental impact of it, the paper cups were so much worse for the environment because they had to cut down trees and use so much more water and so much more output to make these cups than the polystyrene ones. And so, even if we try to shift a lot of the disposable plastic to non-plastic, so like you go to Trader Joe's and they have these hideous bags for putting your, fruits and vegetables in that are like not made out of plastic, that's something else. And they're, I don't know. I can't stand them. They're really bad. Obviously, I would love to be that person that uses reusable cloth bags and washes them and all that stuff. But I'm not that person. I'm not there yet. I'd love to be the person who grows all my produce too, but I'm definitely not there yet. But if you think about what they're creating this stuff out of, you're actually, for every paper straw. Maybe the goal is to get people not to use straws because paper straws just kind of like dissolve in your mouth. Right.
It's a bad It's a bad way to go. Yeah.
Maybe that's the actual goal. But, you got to remember, like, it's not just one is better than the other. They all have negative environmental impacts here.
Well, did you see that Trump is combating this by selling his straws, his own straws?
Oh, God, no. I had no idea.
Yeah. Okay. Oh, so Trump straws, pack of 10, $15. And
I'm sorry, but Walmart, like, you can go to Walmart. I have like a pack of plastic straws I bought from Walmart in these like pretty colors. I'm still going through them. I mean, granted, like I maybe use like one a week for my iced coffee. So it's not like, and plus I reuse it, but that's mostly because I don't really wash the glass that I use and drink my iced coffee in every day. I just kind of refill it. Yeah. But like, wow, I don't know if I'd pay $15 for a bag of Trump straws. Wait, did they say Make America Great Again on them?
They say Trump. No, so the Trump straws pack of 10 for $15. They have Trump in black and they're red straws. Liberal paper straws don't work. Stand with President Trump and buy your pack of recyclable straws today. Please allow. They're recyclable. They're 9 inches long, pack of 10 identical straws as shown, laser engraved, and guess where they're made? They're made in the USA.
Wait, but do they bend? Do they bend or?
No, they're just straight straws. I sent you a link to it in the chat so you can
okay. Well, I'm going to share that with all of our I'm going to share that in the show notes because all of our listeners know that we are actually right-wing propagandists.
Right-wing propagandists, so we had to bring that up. That was actually a pitch. Yeah. We're getting a cut off of all those straw sales.
Every straw you buy. Yeah, you should also buy, look, here's a Make America Great Again hat and a Women for Trump rally sign. Oh, boy, you can buy everything on this site. Oh,
Yep. For our Latino listeners, Latinos for Trump, there you go. Get a set of 2 for $10. So you get 2 signs for $10, but you get 10 straws for $15. I think the sign deal is actually the better value there.
Yeah. Ditch the straws or get yourself one of those really nice metal ones.
Yeah. There you go. They should sell those. Okay. Let's move on now to. I got out of order here. Here we go. From Reuters, China's Iran imports plunge as U.S. sanctions bite. So I read this, Helen, and I put my little tinfoil hat on, and I thought we just had news of Trump and China resuming negotiations. Is it the sanctions, or is it China looking to play nice with the U.S. at this point in time?
I've always said that Trump should have done more with the waivers for China to import Iranian oil than it seems that he did. But you know what? Perhaps that will be on the negotiating table this time around because, I think there's really a missed opportunity if you're not connecting that. You're just not saying because they could easily do this to, Iran is pissed right now. China's in a bind. They could easily come to the table with China and say, okay, China, we're not going to relax any of the tariffs, but we are going to issue you a special waiver to import, X amount of Iranian oil. And, as long as you're continuing to negotiate in good faith over these, or you relax in this, trade negotiations. And that kills 2 birds with 1 stone because they're basically giving something to China that's extra that doesn't have to do with the tariffs. Plus, it kind of relaxes things just a little bit on Iran while still showing that the U.S. is really the one holding all the strings here. And it could be really interesting because it could also be a way to kind of jumpstart negotiations with Iran, maybe get them to release some of the Americans that they're holding prisoner and British people that they're holding prisoner. It would. I really think that they should use this. So, President Trump, since we just promoted your plastic straws online, maybe, listen to our foreign policy recommendations.
Well, in his defense, it's not like he's got a whole lot of policy issues that are going on right now in the presidential run. He's kind of getting a free pass on some of that stuff. Well, it's going to be interesting to see what happens. I thought this was an interesting headline because these, as we've said many times, and until this kind of is resolved, all these are kind of tied together with Iran and Venezuela and China and Russia. They're not separate issues. You can't look at them in isolation.
Oh, yeah. And giving kind of an update on what's going on. So basically, China is now Iran's only customer of oil, and the amount of oil has gone way, way down. So I was on Bloomberg last week talking about this. So basically, since the waivers have ended, the amount of oil that Iran has exported to China has gone way down. These numbers are according to Tanker Tracker's numbers. I think in April and May, or maybe May and June, it was way down to like around between 500 and 600,000 barrels per day. And this is from over, I think, 1.5 million before. And right before the waivers were ended, I think they exported a little over 1 million barrels a day to China. But now what's interesting is if you look at the numbers for July, which is just about over now, they're over 700,000 barrels per day to Iran. So it's kicking up, and this could be an interesting issue. It could also be one of the reasons why the U.S. has decided to sanction a Chinese company. I don't remember the exact name of the company, a Chinese company for importing Iranian oil. They've decided to I guess, enforce sanctions. I'm not exactly sure what that means. They either fine them, or like the company agrees to a fine with the U.S., or they sanction them by saying, like, we're going to fine anyone who does business with you. So it's like, it's not like they like bomb them or something, but it's a little complicated. But they've definitely announced that they're going to enforce penalties on this company. I'm not exactly sure what that means and how they're going to do that, but it may not be the first company that may just be the first of many. It may not be the only company that we see.
Okay, let's get our last piece in before we have our guest on. From the New York Times, it's an opinion piece from, is it Wasserman? Lee Wasserman?
Yeah, Lee Wasserman.
Who is the director of the Rockefeller Family Fund. And it's titled, "Why Are We Still Looking for Oil and Gas? In Choosing Leaders, Our Test Should Be, Will They Increase or Decrease the Extraction of Fossil Fuels?" Of course, I would say if you're doing that, then don't say you're a free market person. But anyways, which is funny because on their page it says that it seems to be that they're for that. But anyways, okay, Ellen. So why are we still looking for oil and gas, Ellen?
Well,
how dare we do such a thing?
I know. Well, the reason we're still looking for it is because it's valuable and people can sell it and people want to use it. And there's money to be made. I think if there was no money to be made in this, then we'd probably stop looking for it. And
people would die without it.
Yeah.
We would just die without it.
Well, I mean, I could see a situation in which, post-apocalyptic situation in which people were no longer looking for oil and gas.
Okay. We wouldn't all die. The zombies and a few scragglers would make it through.
Yeah. Or we somehow discover some magical new
is it cold fusion or hot fusion or fusion or whatever?
And then we can maybe stop looking for it. I mean, it's interesting because when you read this headline, you could think, okay, why are we still looking for oil and gas? Because we already found so much of it. Like, is that
right.
the reason? So, but I thought we should consider it. We don't often talk about this like climate policy stuff, but I thought it was an interesting connection between climate policy and also like oil and gas industry, because obviously, when during the Obama administration, I mean, what potentially could a U.S. president or leaders do to halt the search for oil and gas? I mean, what potentially, like within the constraints of the system, what could they actually do? And the only thing I could see is just forbid oil and gas companies from looking at federal land. So basically just end all leasing on federal land. They couldn't stop it on land that's not federal.
Mm-hmm.
So I just thought it was interesting, like what is the approach that this person is looking for here?
Okay, so they could Trump, and we need to, if the listeners are curious, David Blackman has put some articles a couple years back on this and I think maybe the first couple episodes of this podcast we talked about it. Under the Obama administration, I believe previous ones, I don't think it was just the Obama administration, the EPA had a stance of sue and settle. And so they would kind of get these suits by these environmentalist groups and they would settle with them. And so they would never actually, and again, don't quote me on this, but something to the effect that they wouldn't actually investigate and actually rule on anything. They would just kind of pay out a lot of money to these environmentalist groups. Trump's administration has changed that, and the EPA has rolled back some other regulatory things during his time. So they could put different personnel in the EPA that would make whatever the extent of the EPA is. Of course, some of us might argue it's not even constitutional. But that aside, some people the president could change what the EPA what their mandate is and how they're going to do stuff like that. So that would be, I think, the first thing. Of course, there's obviously federal permits for facilities and infrastructure projects like that are critical. FERC regulated projects, you could tighten down regulation on that, which would impact the industry some. Can they stop it 100%? No, but could they make it very frustrating? Yes. And final thing is, I think during Obama, there were some regulations that were passed. I want to say it had to do with natural gas and some paperwork that it made the producers file. And I think Trump lifted that executive order, if I remember correctly. Anyways, I remember Blackman saying that the amount of regulation that was involved put a lot of small producers in a bind because they could not just keep up all the regulations. So you could do stuff like that. Of course, the Exxons of the world and the Chevrons of the world, unless you just somehow ban it, they're not going to stop them. But you could make it very tough on some smaller ones through some selective legislation, I would suppose.
Oh, regulation. It's always what the big companies want to keep out the small companies.
Well, okay, so I'm glad you brought that up. Can we digress on the Facebook deal for just like 30 seconds? Did you see that? That they had to pay a $5 billion fine to the FTC?
No.
Okay, so they got to pay
this come out?
I guess last week. They got to pay a $5 billion fine to the FTC.
Out of the country.
Yeah.
All right.
And on top of that, they're going to put together a security advisory panel. And so for two things. One, the FTC is saying that we were the ones data was stolen, so I'm sure I'll be seeing that check in the mail soon. But two, it seems like Facebook will now be the ones that will put together this panel on how to protect people's information, which means that smaller social media sites would have to go through whatever Facebook deems as important, which goes to what you say, which is important here. It's always, we talk about regulation. A lot of times it's not government actually setting it. It's government with big business setting it, which then keeps out small competition. So that is I think something to watch out for. And back to the piece, sorry about Facebook digression there. This piece closes out by saying that those of you who care about whether the next president will do what she or he can to slow or prevent the next generation of extinction and mitigate human misery should follow closely whether a candidate is serious about keeping fossil fuels in the ground or is focused only on reducing the demand for them. If it's the latter, the colors for the candidate's portrait won't brighten anyone's day. And you know what? I thought, what a smug asshole. I'm going to tell you something.
What the best part about this is?
What?
You know where this guy who heads the Rockefeller Fund got all the only reason he has a job,
right,
the only reason
exactly.
he has a job is because Rockefeller and because of Exxon. I mean,
right.
Come on.
Exactly. If you look at any measurable statistic over human quality of life globally, it is far better than it's ever been in the history of mankind, and it's going up and towards the right. So this is one of the climate stuff just frustrates because you can't actually have a reasonable discussion about how to think about the issues, how to balance the issues. And so guys like this are that's what gets me called a right-wing propagandist because I have go down to some of these poor villages in Honduras or South Africa or Nicaragua or Guatemala and say to those people, hey, we could give you oil and gas to help expedite your process to come into first world, but instead we want you to sit down here and live in the slums and trash. And I don't say that as a flippant comment, actually have been there myself on the ground. Go to those people and say, well, we want to hold back your progress because we think that we understand this science, which actually, if we want to be honest, that we don't really have a good grasp on. But instead of progressing you, we want you to starve to death and you're not have medical attention and get the plastics that you need for medication and all this stuff. So people like that, I just can't stand.
Yeah, well, but they get to write in the New York Times, so.
Yeah, what a loser. I just can't.
Tell us how you really feel, Ryan.
And it's not. And we say quite often on the Texas Oil Gas podcast, when the industry is doing something wrong, I'm a big advocate of landowners' rights. So I don't want to give them a free pass, but you just can't give this a free pass either. And so
there's definitely has to be a middle road here, something other than keep it all on the ground.
Exactly.
And
okay, so up next we have on, once again, Gene Epstein, who is the director at the SoHo Forum. For more information about that, you can go to the SoHoForum.com. They have a debate coming up on August the 12th about Bitcoin, which I'm sure Ellen and I might have a question or two about here at the end. But, Gene, as we were saying offline, the last time you were on, we were talking about the economy. This has been back in January, February. I can't remember. It's been so long ago. But we're talking about the economy. How do we view the economy from a scale of, is it trending upwards or downwards? Since then, it seems like all the articles keep saying the economy is going bad, the economy's done, it's the end is nigh. And you spoke about following the inverted yield curve, if I remember correctly, last time. Give us just the 30,000 foot view of where's the economy at right now, and where do you think we're going over the next, we'll say, to the end of the year?
First, let me quibble with your designation of the SoHo Forum. It's we're an org, not a com. The SoHo Forum.
I'm sorry, you are correct. Yeah, we will correct it. Okay. SoHoForum.org. Thank you.
I appreciate that. And I'm in thinking about our discussion of this afternoon. I realized that I'm practically going to be one of those two-armed economists. Clearly, the risks of a downturn are greater than they were when we spoke months ago, and they're greater because we do have, from day to day, an inverted yield curve that specifically defined as the 3-month Treasury bill rate, at times higher than the 10-year note, and that's a pretty good indicator, and I say pretty good, although if it were marked on a curve, it would be regarded as outstanding because it almost never gives off a false signal. Almost every other indicator that you could choose, rise in the unemployment rate or a decline in the manufacturing index or almost any other one you could choose, they often do give off false signals, false positives, or I would call them false alarms. And so we are closer and to that risk, although if I were to put on my green eye shade and really get granular about it, the inversion of the yield curve is not quite as persistent as has been in the past when it did precede a recession. And on top of that, the recession that followed the inversions in the past often took about 18 months to occur. So it's a pretty, dicey indicator, but at least it is telling us something. It's certainly better than nothing. But in a way, the real question for me is not so much when a recession is going to occur, although, of course, that's a pretty important question for many of us, especially for investors. It's also a question of how bad the recession is going to be when it does strike, because we know that given our current monetary regime and given the way our leaders at the Federal Reserve screw up all the time, we know that a recession will strike.
Yeah, you mentioned that. I know Bob Murphy, who we've had on the show before, not talk about this, but I know I think it's him or maybe Peter Schiff, one has even hypothesized that stagflation could be something that we could see in this next recession. It could be that bad. Obviously, we can't predict that stuff this accurately, but what are your general outlooks? Are you expecting a severe type recession or one more of a lighter grade, if you will?
Well, I differ. You mentioned two people I know quite well, Peter Schiff and Bob Murphy. I do think that Peter Schiff certainly was on the mark when it came to the recession of 08-09. And I have egg on my face because I certainly saw that there was a housing bubble, and I certainly knew that it burst. But I didn't anticipate that the downturn would be as bad as it was. I thought maybe there might even just be a slowdown. So I give Peter credit for that. But ever since, Peter has sort of tasted blood. And I know that way back in January of 2016, he was predicting that there would be a recession before the presidential election was held. And so he's become a little bit of a perma-bear. And of course, he's going to be right eventually. Although, of course, he could also be getting to the question you put to me, which is, and the one I put to myself, which has to do with how severe the recession is going to be. I know that Peter and Bob, who has been less of a perma-bear, Bob Murphy, whom I also have a high regard for, they both think that the recession will probably be worse than the 08-09 recession. And I commend them on that because I hope they both hope that they're going to be wrong, because that's going to bring a lot of human misery. I hope they're not people who I know Bob isn't. I know him better than Peter. I hope that they aren't going to be happy if they turn out to be right. That an unemployment rate that went up to 10% the last time, it's going to go even higher this time. A lot of human lives wrecked, suicides. So I say that also because maybe because I shudder at the thought, I prefer to think that maybe they're going to be wrong this time. And that I do reflect that when we look back on the recessions of the past 20, 25, 30 years, it's even difficult to explain with the benefit of hindsight why, for example, the worst recession since the most recent recession, since the Great Recession, was the one in 81, 82. I mean, when Volcker hiked the interest rate, the short-term, Paul Volcker, the Federal Reserve Chairman at the time in the early 80s, hiked the Fed funds rate to 22%. We knew there was going to be a downturn, but we didn't necessarily know it was going to be as severe as it turned out to be. And so I think that that part of the reason why these when these recessions are severe or mild has something to do with the luck of how badly the Federal Reserve manages it when it does happen. Peter and Bob focus mainly on the fact that we had a zero interest rates for so long, and we do know that it's almost axiomatic. Then when a short-term interest rate is at zero, you're producing the potential for bubbles. The only reason why I question a couple of reasons why I question whether they're right or not is first, maybe it will be a mild recession similar to the ones we had in 2001 and the one we had in 1991. Two reasons. First, when you look at any measure that you can find on the extent of bubbles, and the bubbles including a housing bubble or a bubble including a stock market bubble, then you find that the conventional measures are less severe than they had been in the past. We're looking at less of a bubble. I'm thinking specifically, for example, of measuring the house price, median house prices, or any measure of house prices you want in relation to rents. And that was really in bubble proportion. House prices were very, very high in relation to rents in 05, 06, much higher than today. Similarly, when you're looking at stock market bubble, you're looking at price earnings ratio, for example, and price earnings ratios conventionally defined are not nearly as high as they were in 99, 2000. So now that obviously doesn't solve the problem. It doesn't refute the idea on the part of Bob and Peter that we're going to have a more severe recession. But at least I wonder whether this debt, the debt bubble that Peter points to, is necessarily going to be so severe. The debt bubble, meaning that yields have been low and debt and bond prices are high. And then when we think about it, the question really is, the second reason why we're not sure about whether the recession is going to be so bad is that we have to measure the short-term interest rate against what the market's interest rate would be. And we can never quite know what the market's interest rate would be. In other words, how much has the Federal Reserve been distorting the interest rate? We know that 0% is a distortion. I'm pretty sure that the current interest rate is a distortion. And now, of course, we know that the Federal Reserve is going to lower the interest rate possibly by 25 basis points. It's too low, but maybe the market's interest rate was pretty low, has been pretty low, partly because inflation has been quite low. So again, I wish I had all the answers. I'm only saying that I would not be surprised if this time around the recession is relatively mild rather than quite as severe as the kind of recession that Bob and Peter are predicting.
Well, that's good news, at least for someone who was quite traumatized by that last recession, given given my age and where I was in career wise. I guess that's good news. possibly.
And how old are you?
I'm 37.
Oh, 37. Okay. And then of course, I should comment that I hopefully am not here to bring good news. I'm here to bring the correct news. And I'm not necessarily insisting that my news is correct. I'm only saying that we really are all sort of dealing with, with the blind man with the elephant. The one blind man thought it was a snake because he felt the trunk. We're groping. And I do think that all things are possible. I certainly, when I look back, and when the recession, the big recession of the early '80s hit, there was no anticipation that we would get the great. Now I'm even forgetting what it was called, the interregnum, the moratorium, when recessions were mild. That came as a surprise, and so the 1991 recession again was mild, and so was the 2001. And we tend to be looking backward, and we tend to be applying old news to the future. And I'm only trying to caution about that. And if it is good news, so be it. But hopefully, it's the correct news.
One of the questions I have is, one of the things that we saw in 2008, 2009 was it really wasn't in many senses a global recession, but we've been seeing, at least, we often have Dr. Gene Foreman, who's the chief economist of the API, on, and he talks a lot about certain indicators of slowing economic growth, and yet there are some issues which kind of defy this in terms of consumer spending and demand for jet fuel, for example, that are not showing weaknesses. Is there a potential that the coming recession, whenever it does show up, will not necessarily affect all areas equally? I mean, it does seem that, for example, the economic indicators coming out of Europe, in particular Western Europe, are much worse than what's coming out of the United States. Is there any sense that it might not be necessarily a global recession, or it might not apply to the same extent in all areas?
Sure. Well, I mean, for example, I could elaborate on that point and say that of course, it was during the 2001 recession, a relatively mild one. We did not have a recession in housing, and the house prices were rising, and the housing sector was booming, and that, of course, was a disconcerting augury, advanced indicator, because that was part and parcel of the housing bubble that was forming. But still, that did happen. We do always have. I do think that the term recession is probably a little bit of a metaphor, just as you seem to imply. We could have certain sectors doing okay. Maybe the cruise ship business, maybe rich people continue to go on cruises, but certainly whenever you have a recession, the most important thing is you do have a decline in the number of jobs. Jobs in an expansion, jobs are always increasing. Now, where the decline occurs is always of interest. In the last recession, we had a decline a special decline, of course, in residential construction, and so that was one of the key indicators that one of the key reflections of the fact that there had been a housing bubble that had burst, and we also will have a decline in manufacturing. I don't think there's no recession that hasn't been accompanied by those two things. Now, when it comes to the global implications, certainly if the United States sneezes, the rest of the world tends to catch cold. And so. Difficult to imagine that a recession in the United States will not bring a slowdown elsewhere. We're buying less and so on from other countries, then it definitely will happen. But certainly it is interesting to look in a sectoral sense and look at different sectors that possibly survive and even thrive. Even during the Great Depression, there was a fair amount of activity in different ways in different aspects of the economy. But so therefore the macroeconomic view is a little bit of a metaphor. But but certainly when we talk about recession, we talk about unemployment, jobs declining, and manufacturing declining as well. Then we're looking at something. But with that said, for example, it was argued in the 80s that, and actually mainly in the 90s, once it looked as though recessions were getting mild, that because we're more of a service sector economy, and because manufacturing does not, because manufacturing accumulates inventories and is inherently more cyclical, but since we're more services than we ever used to be, that we're going to have milder recessions. Now, obviously, that was an overstated point. However, there is some truth in the fact that the service sector tends to respond a little bit more slowly and it tends to be a bit more resilient to a downturn. But I will say that in terms of your broad question, I'm not sure what the other gentleman you mentioned was getting at, but I also should say you mentioned consumption. So with respect to consumption, the key point to emphasize is that just about no recession is led by a decline in consumption, and that's really the nature of, and then that's evident enough in just the standard macroeconomic numbers that are tracked by the government, and that it's very clear that maybe consumption spending growth will slow, but the only time, and then on top of that, actually, it is true that virtually certain in the 1991 recession, actually in the 2001, I think you didn't even have a contraction in consumer spending overall. And so that too, as you indicate, could survive, but you do have a slowdown in consumer spending. And in most recessions, you have a decline, but the decline comes after the collapse in investment, residential investment or a plant and equipment investment. That's really, as the Austrians have taught us, Friedrich Ludwig von Mises, Friedrich Hayek, that's where recessions really do start. And you only have to look at conventional numbers to recognize and confirm that that's the case. And obviously, when manufacturing starts to collapse or residential investment starts to collapse, clearly then people are laid off, and then layoffs will lead to a decline in consumer spending.
Let me ask you this real quick. We've talked about China a lot on the show. We wake up tomorrow, President Trump announces that he's lifting the tariffs and he struck a deal with China. Is that enough what would that do for the economy? There's a lot of speculation, but I'm curious if we actually do get a deal done with China, how does it change what we've been talking about here the last 15 minutes?
I'm sorry. What would you say if we do a what with China? I didn't hear that.
If President Trump gets a deal done with China, does that change anything?
Get the deal done. Oh, yeah. Well, I mean, my own take on this is that I've been impressed by an article that the Wall Street Journal ran about a month ago, which was written by an importer, American importer from China, imports software goods from China, and he said that he and his cohorts really had the reins of power over the negotiation, and that the 25% tariff that was being imposed on his particular industry was, for the most part, being abrogated by the fact that he got the Chinese to cut their price. And so he was paying, in effect, a 5% tariff. And that this is actually a very old story, that when exchange rates affect trade relations, or when tariffs are imposed, as long as they're not completely draconian, then to some degree they're abrogated by agreements between the buyers and sellers. So I'm only reacting by saying that I do see some effect from the tariffs on manufacturing, but I think it's being exaggerated. I think that manufacturing is probably going into a down cycle from which it could recover. I mean, we've had this before a couple of times. The manufacturing cycle does go up and down within the context of an expansion, and so things have been worse. Were worse a few years ago with manufacturing before Trump came in. And so I think that the weakness in manufacturing right now is probably would have occurred even without Trump. Is overbuilding and oversupplying and then undersupplying. And so the answer to the question is then that I don't think that this might have some psychological impact, but I believe that in terms of its impact on the actual numbers I don't think it's going to be that great, and therefore I think that the whole China tariff thing has been somewhat exaggerated. But of course, the real when to go back to an earlier question, when we talk about how one country's sneezing or catching cold can affect the rest of the world, then China has become possibly large enough so that a big slowdown in China could influence the rest of us. But if you are old enough to remember in 1998, the Asian collapse. And there was this expectation that it was going to affect the U.S., and it didn't. It didn't have much of an effect at all. But of course, the Asian nations at that time were much smaller in relation to the rest of the world. But and then China is, so that's why China could have an influence. But I do think, again, going back to your question, that Trump's Sturm und Drang with the Chinese is having some effect, but I don't think it's the main event.
Okay, we are getting up against the clock here, so let's talk about the SoHo Forum. You have a debate 2 weeks from today, August the 12th, on the topic of Bitcoin, sohoforum.org, not com, .org. We'll link to that in the show notes. On Bitcoin.
The SoHo Forum.
The SoHo Forum. I'm going to get it right. I can't read today. The sohoforum.org. It will be in the show notes.
Of having to, we couldn't put in Soho. It had to be the Soho because, things get taken because Soho is a very popular name. So.
Well, the good thing about messing it up is we say it right 15 more times. So then hopefully.
The SoHoForum.org. Yeah.
It's in the show notes for the listeners to check out. It's on Bitcoin. Ellen and I have loosely touched on Bitcoin a little bit. I know you'll be moderating the debate. I'm just curious, give us a 30-second Gene Epstein view on cryptocurrency, Bitcoin, and some trends to watch over the next year. Apart from this debate, which is about is it going to work out for a nation's main exchange? But I'm curious, what are your thoughts at a high level on crypto or Bitcoin or whatever one you want to talk about?
Well, I'm going to get on a high enough level to say that I can't predict where the price of Bitcoin is going to go in the next 12 months. I'm pleased to see that it bottomed out. And I do think that cryptocurrency could be the wave of the future. I do foresee the potential for a fiscal crisis of the dollar in about 15 years because the debt is out of control, and it could take 15 years for that problem to really bite. The Treasury debt is out of control, and that once that happens, then there could be an opportunity for the rest of us to turn to cryptocurrency as the medium of exchange. And so that's my optimistic view. That would be the silver lining to the potential of a debt disaster striking about a decade or two from now.
Okay. The SoHoForum.org. I got it right that time. The SoHoForum.org.
That was perfect.
They have all kinds of debates. I catch Gene on Tom Woods and Dave Smith talking about the debates and various things. So I always enjoy that. So I haven't got to go, but if I ever get up to New York, I haven't been to the Big Apple, I will definitely try to get up there and check out one of these debates. I see you got Walter Block coming up here. Dave Smith, I see you got on the books with some folks that I know or know of, rather. Anyways. So,
and say the name Tom Woods to me, and you get a free drink at the bar.
That's right. I forgot about that.
Yeah. Okay. A major big offer. It's a great inducement for people to take the trek to Lower Manhattan and come to the SoHo Forum August 12th when we'll be debating Bitcoin.
Okay, Gene, thanks again for your time. TheSoHoForum.org. We'll link to it in the show notes, and hope to get you on maybe third, fourth quarter this year, late third quarter, early fourth, to talk about what's going on in the economy at that point.
My pleasure. Thanks a lot. Bye-bye.
Thank you.
And thanks again to Gene Epstein, the director of the SoHo Forum. You can find out more about going to thesohoforum.org. I hope Nate leads in all of the incorrect ways I said, but it's thesohoforum.org. It is in the show notes. If you're up in, we have some folks in the Northeast that listen to the show, I know, so go check it out. They have some interesting debates that go on. I think it's once a month, I believe, is when it is, or maybe it's, once a month. So anyways, go check them out. And if you say Tom Woods, you get a free drink. I did know that. I forgot to mention that.
Yeah, don't forget that. That's got to be key if you're going to listen to a debate on how cryptocurrency will take over when the dollar completely fails and all of America goes to pieces.
So they've
that free drink.
So it's Bitcoin this month, and the next month it is the Libertarian Party should never again put up national candidates whose views are similar to Gary Johnson and Bill Weld.
Oh, but it was so their convention was so amusing.
I know.
I want to go to this. That's September 12th. I don't think
That's
I'll be in New York,
September 10th. September 10th.
That sounds amazing.
Oh, that does. That does. And Dave Smith, who's a comedian and pretty funny guy, and then Nick Sarwark is. Anyways, that should be an interesting debate because I think if you're going to
preview of that one,
yeah, if you're going to put him on, at least Gary Johnson should know where Aleppo is. You know, I think that should be a bare minimum requirement. So,
he was probably high.
Probably was. Okay, well, Gene's stuff was interesting, and hopefully we'll get him on here. I don't know, a couple months to kind of keep us up to speed. You know, he's not as doom and gloom as some of the Austrians are, and so I thought that was interesting. And I tell you what, for a guy who just hops on the phone, Ellen, unless he had a notebook sitting there, he was pulling kind of all that stuff. It sounded like off the top of his head. It was pretty impressive.
Oh, yeah, that was impressive. It was interesting because I heard this guy whose name I can't remember, Zandy, I think, speak in Jacksonville like last month or 2 months ago and he was like so optimistic. I couldn't believe it. Like his picture of the economy was like super optimistic. And I think I said something on Twitter and people were like, yeah, this guy's always optimistic. So I guess you put him in a room with the other guys and they
balance each other out. Okay. Where will you be this week, Ellen?
So I'm actually going to be in Aspen. I am co-moderating a seminar for the Aspen Institute about Saudi Arabia. So I may be kind of sparse on Twitter and so on. I'll definitely be on investing.com because got to get that weekly column out. And I will still be in the, I don't know, in the Rockies, I guess you could say. Next Monday, so we're not going to be here next Monday. I'm heading out to Wyoming, and I may actually I think we're heading to Gillette, which for a day because really I want to see Devil's Tower. But that is like the home of the Wyoming energy industry. So cool. I'll try to take some good pictures and follow me on Twitter.
Awesome. Yep. And Text Only Gas Podcast, if you followed the duck debate we had on the folks that issued that report this morning, I'm sure we didn't ask every question that everyone wanted to, but we at least tried to get the thought process and understanding for how they're collecting the data, and then listeners can figure out if they think that's satisfactory or not. Text Only Gas Podcast, Oil and Gas Contractors Connect, and the new podcast about putting together deals in the oil and gas industry, Bring in the Closers with me and Ben Samuels. Other than that, Ellen, that's it. Well, we'll enjoy the vacation next week. Be safe and enjoy the cool weather up in the Rockies.
Yeah, it's actually going to be like in the mid-70s, which is pretty cool. So I'm bringing my sweatshirt.
Well, good deal. And to the listeners, thank you so much. AndrewWeekPodcast.com is the website. We'll talk to you in 2 weeks.